and this is what you're looking at this week. And this is
Mm.
United Airlines, ticker symbol UAL. I feel like the airlines have been getting a lot of drama lately with these malfunctions and videos and
Yeah.
doors flying off hinges, things like that.
Dude, you cannot, we are in a time where everybody has like a high res camera in their pocket. You cannot get by with like shenanigans as a company delivering a product or anything because you're going to get captured on video. And then not only that, with a small press of a button, that thing is going to go to everybody else in the world. So, all these things that were probably happening, in my childhood and in my adult life that, would just get swept under the carpet because only a few people saw the actual thing that happened. And besides, word of mouth, it wouldn't get spread. Now you've got, a video is worth 1,000 words, right? Oh my goodness. But United Airlines has not been one of those companies yet that has been caught with any of those shenanigans. They've been caught with other shenanigans, but not with like planes falling apart. Like Southwest has had, I think, 2 occurrences in just the last month. But yeah, we've got a nice down arrow, and it looks like we're at resistance. But I I'm a little bit gun shy about buying this stock, which is generally what we would do the next time a bottom is found. I'm not saying I'm not going to do that and try to trade the uptrend, but hey, look, earnings is next week, right? And this stock has a little bit of movement in earnings, but traditionally this stock weathers earnings well. However, investors ahead of every one of these earnings have traditionally piled up on options just to be sure, right? They just protect themselves. As we talked about with the VIX, which is a measurement of the number of options being bought on the S&P 500, as far as individual options on United Airlines, when people start buying those options to protect themselves ahead of earnings, we see the price of the options go up. Now, what do we do when prices are up? Well, I mean, I've always learned that you buy low, you sell high. If prices are up, I need to be selling, right? And so that's what we want to do. We want to create a trade, and that's why options are amazing, right? I want to create a trade where I am selling these overpriced options. And the options that are completely overpriced, like extremely overpriced, are the ones that are going to be expiring around this earnings date. So I'm looking at like 10 days. Like I'm looking at maybe April 19th or maybe the weekly option after that, the 26th expiration date, because those are the options that people are using in order to protect themselves ahead of earnings. So those are the ones that are going to be the most expensive. Now, whenever you want to sell options, you have to have something, because when you sell an option, you put yourself under an obligation. The person who buys your option has a right to basically enforce or exercise that option at any time. So you have to, because you're under the obligation, you collect a little bit of money from this buyer, right? And you need to be ready to be exercised. So you need to have something that can take care of that obligation, something it's like collateral. And so we want to find some sort of trade that can act as collateral that won't be swayed by this up and down motion. So I'm talking about, just for you academics out there, I've been talking all theoretical here. I'm talking about a calendar spread. See, if we buy an option that's over 6 months to expiration, it's not going to be used as one of these hedging options. Its price is going to remain fairly stable, right? So if I buy that option and then immediately sell the volatile option, right? I'm going to basically buy something at this price, sell something that's overpriced, and then as that earnings goes by and people don't need those anymore and the price comes down, my overall trade is going to go up in price. I know it seems a little complicated, but what I'm talking about here is an earnings play using a calendar spread where the back month option is more than 6 months to expiration. The front month option is going to be like, next week or the following week expiration, because options expire every Friday. And I'm going to create that calendar or horizontal spread, and I'm going to put it on probably on either the 15th or the 16th of April, and then I'm going to look to take it back off right after earnings has happened. So that's my trade of the week. I think that we're going to make a nice chunk in just a couple of days here on this earnings play.
And the trader term for this is called a volatility crush.
Yeah. And so we're going to take advantage by using a calendar spread. We're going to take advantage of the volatility crush that happens. So what I'm saying here is people have raised the price. It's too late to make money on the volatility rush. In other words, make money on the options appreciating in price because the demand, it's already there. It's the prices are already, I was looking, the prices are already at a high. So now we want to take advantage of the volatility crush. We want to start selling options at this high price and then buy them back when the earnings is in our rear view mirror and people don't want those options anymore. So they're going to sell them back. The price is going to come down, and that's when we're going to buy our options back. I don't know if people remember that movie that I grew up with called Trading Places with Eddie Murphy and Dan Aykroyd, but we're going to basically do what they did in that movie, which was, sell when everybody wanted to buy it and then buy it back when everybody wanted to sell it. So I always talk about being on the right side of the transaction, the correct side of the transaction. That's exactly what we're going to do here. I can't wait till next Friday, Sip. I know that we have a guest on our show next week, but I'm going to take a moment, no matter what, and explain the exact trade that we did in the beginning of next week to show people how it worked.